All right, welcome to Momentum Monday. Today is Sunday. What is it? September 1st, I think.
Labor Day.
Labor Day tomorrow, yeah.
What are you wearing? Your doctor's Nike scrubs?
And that's actually a golf shirt, even though I don't play golf, but I like it. It's
I like
comfy.
it. What's going on for the weekend? It's 700 degrees in Phoenix.
Oh, it's really nice here in San Diego. Just swimming and playing volleyball with friends.
Good for you. How's F45 treating you?
Oh, it's really good. I like it. I go 3 times a week and I'm satisfied with the results, so I keep going.
You still look like Gary Shandling. Can't you tell them you want to look like somebody different? Just below the, I guess.
I don't know what you're talking about. All right, let's talk about markets. We don't need to waste people time with that.
Okay, let's go right to the S&P. Let it off. Tell us what you see.
Let me share my screen. All right, let's go to the S&P.
But now I'm gone. You've dropped me from the video.
Yeah, people prefer charts, Howard.
Okay.
As handsome as you are, people prefer charts. And I mean, S&P is still locked in a range. It's obvious between 280 and it's 295, which is coincides with this 50-day moving average. Has been chopping in that range. Like anytime the market would go down a few days in a row, people get scared, go out of the market, and then the market rallies for a few days. People get fear of missing out, and then jump back in, and then we see the same exercise repeated several times. You
Go
know,
back to the weekly, Ivan. Yeah, this is interesting. So you basically have this kind of breakout at the beginning of June, maybe? No, July.
June. It was June, yeah.
It was June. And we broke out, and then we're back below, we're back below where we were, right around where we were 18 months ago.
As long as we hold the 200-day, which is around 280, I don't think we'll see any major scare in the market.
There's already a bubble in fear. Like gold's rising, yields are like zero, and the yen, there's been a flight to the yen. So those are all panic. Those are what money goes into when there's a panic. So it's kind of weird with the S&P at 5%, 4% from all-time highs. You got a panic going on in yen, in bonds, and
it's only 3% actually below its all-time highs.
So it's weird. Like either everybody's missing something, or we could get a massive rally. Meaning missing something, and there was a reason that the bond market, the reason that assets like flight to security or flight to safety is on. You got yen, you got utilities, you've got gold, and so it's pretty amazing that with all that flight to safety, that the S&P is right there at 3% away from all-time highs. So I think that's got me confused. I think it's got a lot of smart people confused. I'm not going to make any predictions based on that. We're just going to kind of judge my field position. I've been kind of defensive, but it could take 2 days for me to get back on the offensive. The risk remains headline risk, and the headline risk is, Trump is starting to weigh on the market. He's done this a few times where people, back in December, people just making bad decision after bad decision short term, and the markets got tired. And as he reversed positions, the fundamentals took back over, and the market rallied. So what looks good? So assuming we go up.
I mean, before the S&P clears that 50-day, I don't think we'll see any breakout that would follow through in any significant manner. So what's interesting last week that we are finally starting to see software leaders breaking down. And one can interpret that in two ways. One is that, if the last leaders are breaking down, maybe this is the last stage of the correction, and the other is that maybe this is just the beginning of another leg lower.
Yeah.
Because
I mean, like, we don't have enough evidence. There's definitely evidence on both sides, as we've already talked about.
The same stocks that in May held really well and just built new bases around their and above their 50-day moving averages are now acting in a completely different manner. They're breaking down even below their 200-day moving average. So this correction so far looks different than the one in May, which ended up being a great buying opportunity, because even in May we made a comment that this is most likely a buying opportunity because there were so many stocks holding well and building new bases. And this time around, we still have the occasional stocks holding well, like Twitter, but for the most part, the leaders of the past 2 years, the software stocks, are starting to crack.
And well, this was expensive the whole way up. Workday we're looking at, and it's trading at 70 times next year's earnings still, or 80 times. So it doesn't take.
The new leadership that I see is basically in sectors and stocks that are typically very defensive, like gold miners.
Yeah, I mean, the one sector that stood out to me, I'm going to pull up, is medical instruments, IHI.
Yeah, it is holding near its all-time highs.
And if we look back at a weekly, I mean, this thing has been. So you can see, it could be a combination of the fact that technology. I mean, this is a play on kind of hardware technology, and but this is the medical equipment index, which has just been in a relentless uptrend, barring last December, since last year. I think Medtronic kind of leads us. Yeah, that's one that I own, Inspire. But let's look at Medtronic, which has spun out MDT. So the makers of the pacemaker, I don't know, 60-year-old company, but $144 billion company that 90% of investors haven't taken the time to heard about. And they spun out, I call it the the pacemaker for breathing, Inspire, which is kind of like a pacemaker, gets inserted on top of your, just under the skin, on top of your lung, kind of opens up your breathing during the night to prevent snoring and help people sleep. So the fact that this is, it's kind of an invasive surgery. I've done a lot of work on this, and the fact that that people are resorting to this as sleep is a huge problem. And so this whole medical equipment space could be on one of these 30, 40 year runs here. And we can look it up on Koyfin. We can look up all the companies in there. We won't do that tonight. So what else do you see, Ivan?
So as I mentioned, social media stocks are kind of holding well, especially the smaller ones. Twitter is just, after the earnings gap, it's stuck in that 40 to 43 range, but it's, considering how the market is acting, it's definitely showing relative strength. And if the market rallies above its 50-day, Twitter is very likely to be among the leaders. And also the other one, the small ones, Snapchat and Pinterest, are also kind of holding well compared to the rest. So what else? Home builders, interestingly.
Which one?
Home builders are very interestingly holding well. So for example, we have like Zillow, which is doing terribly well, and it's in the real estate sector, and they also started investing in houses, especially in Arizona. Look at these charts. But then we have home builders like MTH setting up near its multi-year highs.
Weekly look like on some of these,
Yes, let's pull up weekly. And all of these have been breaking out to new 52-week highs despite lack of earnings growth.
Could be interest rate
relate. Yeah, for sure. And but this is definitely one of the sectors that has been showing strength as of late. Even you can see in August, as the S&P and the Nasdaq were chopping, those home builders were just, they broke out the new 52-week highs, and
Pull up Meritage. That's a Southwestern home builder. Steve Hilton, the CEO.
Oh yeah, it is.
Is that 25 billion or 2 billion, Ivan?
Let me go back. I think it's 2 billion, 2.5 billion. So it's a relatively small cap, only 38 million shares.
Yeah, really levered to the Southwest.
And so, and this is a monthly chart, and I think it's very interesting. The home builders are looking so well, and there are not that many sectors and industries that are looking that well, and they're looking well in general after the chop that we saw. And if we make a quick round around software, you see a lot of broken names. I mean, I'm sure some of them will just build new, deeper bases, but some of them are really starting to break down.
Oh wow, yeah. Some of them are really. That's a 25%. People were just buying the dips.
Especially cybersecurity, ZS. I mean, you can easily pull back to 60. Cyber, and also another one.
Where's Checkpoint? That was kind of the weakest of the cybers.
Checkpoint.
Yeah.
So Hack, this is the most followed ETF. As you can see, it's looking worse than the S&P. It's below its 200-day, kind of working in a range. So quite a few momentum stocks that have led in 2019.
They've become too favorited. They might have just become crowded over own names.
Starting to break down. Look at this one, which has been a definitely momentum favorite, and they actually have significant growth and sales and earnings growth to back it up. Even they're starting to break down, and I think they'll probably bounce near their 200-day here.
Yeah, that was a hot read for cannabis. Okay, go to the SL. Let's go to our Market Wisdom 50 and see what's showing up. So Twitter, number one.
You're number one. Impinj TI is number two. Chipotle number three. Let's take a look at them. PI, kind of.
It's held in there well.
It bounced near its 50-day. Chipotle has done well after their earnings gap. As you can see, they kept bouncing near the rising 20-day.
Back to all-time highs. Yeah. But again, I think we go to the restaurant sector. It's this theme that, if you look at Domino's, the Domino's had carte blanche in this industry up until about a year and a half ago. They had their own drivers, and now they're competed against with DoorDash, Postmates. So you're going to see continuation of where's this trading at earnings? It's trading at it's coming back in now, trading at 24, 25 times earnings. And where's McDonald's trading at? Let's pull up McDonald's.
Around
yeah, 20. So they're all kind of in line now. So with the delivery companies helping out all these restaurant stocks, things are a little bit more even up now. But I think with the wider menu, McDonald's is still the one to play. These yet to remain to seen if any of these delivery companies will survive.
They're not doing well
as public companies because they're just in a constant battle for market share and mind share and spending. So it's going to be really interesting. I think the only way to play these stocks are to play the restaurants. They're just going to take every last nickel out of these companies, and maybe one or two will survive as products for actual McDonald's or Starbucks. Okay, I think that's it. I think, like Ivan, I think everybody needs to kind of play it cool here and do a little less in September. It's seasonally a weak month. I talk about it often, the back to school. No one's happy going back to school and back to work. Summer's over as of Tuesday. Probably has a lot to do with it. Mood's underrated, and still a lot of headline risk. I think we lost this trade war. I think he went into this with no allies, and China's prepared to just grind this thing down. And so I don't know. Maybe that's pricing. Maybe it's not. I think we resolve higher, but at the same time, I'm not betting heavily on one way or the other. I'm going to wait to see how this was resolved. What about you?
I think no one wins in a trade war, but at this point, the Chinese are not gonna strike a deal that is against their interests. So
Yeah.
I don't think we'll see anything like super favorable for the United States at this point, being so close to the next election.
I still don't know what the end game was. He hasn't really. No one's kind of. What would define a win for the U.S.? I don't really understand it right now.
I don't
Everybody.
know either. Well, at least, I mean, China has been very close. I mean,
Well, yeah, but I'm saying, what's the goal?
China is very popular. I mean, they haven't let companies like Google and Facebook operate on their own terms in their country. I mean, and also intellectual property.
Yeah, that doesn't seem to be on the table though in this war. So that's not going to open up anytime soon. So we could be in for just a long, drawn-out headline war. But the tariffs hit. Apple's going to be affected if we pull up Apple. I think Apple and Nike are the ones that the big American conglomerates that have held up surprisingly well in the face of these tariffs.
Yeah, I think Google is reporting earnings next week, as long with some of the software names like MDB, which is holding relatively well compared to the rest. So there's some interesting earnings this week too.
Okay. All right. Have a great week, Ivan.
You too, Howard. Just one second.